Welcome to Under the Hood, from Beyond the Bottom Line. This is where we step inside the company and talk through the real experiences behind the work. In today's episode, Daniela joins Miguel to answer common questions clients feel too embarrassed to ask about taxes, bookkeeping, and payroll. Here's Miguel.
Welcome to this very special episode of Beyond the Bottom Line. Today we're doing a Minisode with my lovely partner, Daniela Menache, called No Stupid Questions. Tell us about what's going to happen here.
Yeah, so essentially we want to create a safe space where we can answer questions that clients ask but are often embarrassed, and some clients withhold and feel uncomfortable about asking. So we want to address all these questions that people feel are stupid questions, and these days are now reserved mostly for AI.
All right, so this is going to be a human response to stupid questions that we actually drew up with AI.
Yeah.
But most questions are questions that we actually get asked. So we asked AI to tell us the questions that people ask it. So we're going to answer some of those. And like Daniela said, no stupid questions. So let's get started with question number 1. If I don't have money to pay my taxes, do I still have to file?
So believe it or not, I've heard this question a lot of times. Short answer is yes, 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 yes. So even if you can't pay, there are payment options. I mean, in theory, it'll take the IRS a long time to actually levy accounts. But the reason you file is because you don't want to pay the failure to file penalty, which is 5% per month. 5, exactly. Failure to pay is 0.5%. Failure to file is 5%. So you can always get on a payment plan. There's a lot of options, but you always file, even if you can't pay.
Now, does the IRS know how much money I made? And if so, why do I need to file my taxes?
So the IRS knows everything reported on a 1099 W-2, 1099K. So they have that information. Now, they don't necessarily know, if someone pays you a check and you deposit into your account and they didn't issue a 1099, they may not know about it. But the IRS, if they want to audit you, they can go straight to the bank, pull all your bank statements, and ask you about every single deposit. Our government isn't sophisticated enough to file it for us, nor I don't know if we want them to.
I don't know.
I don't know. That's a larger question that we can resolve another day.
Yeah.
Yes.
I think too, the IRS may know your income, but they certainly don't know your deductions.
Yes.
If you get a letter, it's going to assume you have no deductions. So the deductions are an important piece of what they don't know.
Yes, absolutely. So the IRS actually, if you don't file and they have your W-2s and 1099s, they'll file for you with no deductions.
It's very nice of them.
Yeah.
Okay, here's a question. Is it cheaper to just call everyone a contractor?
Maybe in the short term, but not necessarily in the long term. If you don't follow the specific rules of contractor versus employee and you ever get an audit, and actually states are a lot stricter about this. But let's just assume the states don't exist and we're just talking about the IRS. If they ever come back and audit you, they can recategorize the payments to payroll and then charge you all the payroll taxes and late fees and late penalties. So it might be cheaper today, but not later.
Yeah. Payroll audits are the worst audits. So those taxes, you can't get any remediation on. Those are due. I also say, the other thing that triggers it is when somebody files, a contractor that you paid files an unemployment claim. All of a sudden it's going to trigger this, whether they were an employee or a contractor. So sometimes it's the retroactive stuff that makes it scary.
Absolutely. So you can sleep soundly at night, and we suggest just do it right from the beginning.
Let's move into not stupid accounting questions. Are you ready?
Yes.
Okay. So Daniela, I already pay a monthly QuickBooks subscriptions and I connected my bank account. Isn't my bookkeeping done?
You would be surprised how many times clients ask us this. So no, you set up your QuickBooks account. Beautiful. That was step 1. But that was step 1. So now you actually have to post and categorize your transactions. Now, obviously, QuickBooks will try to support you to do that and suggest categories. I'd say sometimes they're right, sometimes they're wrong. But essentially, if it's not done carefully, things can end up in the randomest places and you can end up with a net income that makes no sense.
Yeah. So get some help. But isn't bookkeeping just putting expenses into categories? What else is there?
I mean, yes, but there's an income statement and a balance sheet. So sometimes the categories aren't just like, you have to understand accounting a little for some of the transactions.
That's right.
Yeah.
So for a loan not to be income, you're going to need to know what a balance sheet is.
Exactly. If not, you'll end up, let's say you got $100,000 loan, it might end up in income and then you just paid taxes on an extra $100,000.
Exactly.
That can happen.
And why are there duplicate transactions in my QuickBooks?
It's a great question. Could be that you connected your account twice. Oftentimes, QuickBooks will disconnect accounts and then we reconnect them. It's possible when it was reconnected, it brought in old transactions that were already posted.
Mm-hmm.
Unfortunately, AI hasn't gotten to the point where it figures this stuff out. I'm sure it will soon, but we're not there yet.
Not there yet. So can I just delete transactions I don't recognize then?
I'd say I wouldn't just go willy-nilly deleting things. I'd say it's more pulling up the register if you see it's duplicated. But that's why bank reconciliations are so important. So if you reconcile your account, but not just force the reconciliation, like make sure it actually like ins and outs equal and it's reconciled, then you'll have more confidence that there's nothing duplicate or missing.
So if I don't understand reconciliation, I shouldn't be my own bookkeeper?
No. Okay. You could do your own bookkeeping up until a point, but then you can post your transactions, but I always recommend having a professional bookkeeper check your work and make sure bank reconciliations are okay. We've seen nightmare stories where people were reporting an extra $100K, $200K net income, and it was just because of duplicates, missing transactions, or things miscategorized.
That's really helpful. So let's talk about payroll. So I think I payroll myself. I transfer money from my business account to my personal account. Isn't that my payroll?
Well, the first question I'll ask is, what's your entity structure? Right? So if you're a single member LLC, sure, there's no payroll really needed. You can take whatever you want of profit and pay yourself. Mm-hmm. But if you're set up as an S corp, which requires payroll as one of the requirements of an S corp, then no, that's not payroll. You need to be treated like an employee. You get a professional payroll software. You pay yourself through the payroll software, pay the payroll taxes, and that's payroll.
That's right.
Yeah.
So if I have a payroll software, then the payroll software handles the payroll taxes?
Yes, but you still have to process the payroll in the payroll software, and the software will pay the taxes on your behalf and file the returns.
Got it. So transferring money from my S corp to my personal is not payroll.
No. That is a distribution.
Now, I just created an LLC. Did that automatically lower my taxes?
Unfortunately not. An LLC is the same exact setup as if you were working independently. It's more of a legal structure. If you want to save money on taxes, then you can consider an S corporation structure, and that's an additional filing that you do after you set up your LLC. However, you do need your LLC in order to do the S corp. So it's step one.
So creating an LLC is not a tax strategy without an S corp.
Exactly.
So I have a business credit card. I can just write off everything I buy with it, right?
It would be nice.
Yes.
But the expenses still have to be deductible business expenses and be like necessary. The IRS definition is ordinary and necessary to run your business. And obviously there's some exceptions here and there, but yeah, not everything.
Not everything. Well, let's talk about things I can deduct. So
yes.
Can I deduct my clothes if I wear them to meet clients?
No. Clothing's a big one that's difficult. Yeah. There's very few situations you can deduct your clothes. So one is if you are a doctor and you have to buy like scrubs. So things that are not like acceptable. Acceptable is a very broad range, but in the IRS terms, think of, how long ago those codes were written. What's acceptable clothing to be out on the street? Mm-hmm. You have to prove that it's like industry specific. There's a situation where like a costume could be deductible if you need it for something specific to run your business. Mm-hmm. But just like business casual clothes, even a nice suit, we'd love to argue and say like, I'd never wear a suit out. Of course. But the IRS thinks that's acceptable clothing. Yeah.
How often am I supposed to talk to my accountant?
Great question. Depends on your situation.
Yes.
It depends if you have a business. It depends how complex your business is. It depends on, if you need support. Like ideally, you'd want to at least check in with your accountant a couple times a year. If you just check in with your accountant to do your taxes, then, you can't do the things you could have done last year to save money on taxes.
Yeah.
Yeah.
Sure. So my last question is, am I supposed to know all of this already?
No, absolutely not. There's so much in the world to know, and we do this, so we know this, but there's so much to know, and we don't get taught this.
Mm-hmm.
So that's why we're here.
So it's okay that I don't know all this.
Yeah, it's okay.
Oh, thank you.